I think these inflation data today came like a punch in the stomach to Jay Powell and his colleagues. Their narrative is that as the year progresses, we should see inflation start to abate and to come down. And there was not even a hint of that in the January data. You know, there were special factors at work related to Omicron and the challenges there. But still, if we're going to get inflation to 3% for this year, as Jay Powell has suggested, we've got to see some progress. And I think we're also going to have to see a increasingly aggressive Federal Reserve. And I think that clearly after today's inflation data, 50 basis points for March has to be on the table. And I think the Fed's got to step back and say, even if we do 50 in March, is that enough? What are we going to have to do through the rest of the year to wrestle this inflation to the ground? Because it doesn't seem like it's abating on its own, at least. There's no sign of that yet.
Okay, it's sounding pretty scary there, Nathan. So put this into context, though, and talk to us about the risks of the Fed having to get a lot more aggressive than initially expected, hiking into a slowing economy. Because we talk about inflation at 40-year highs, growth, at least last quarter, Q4 and Q3, was also at about 40-year highs, right? But the quarter we're in right now, things are slowing down. People have been trimming estimates down to negligible to maybe even no growth. What about yourself at Citi?
Yeah, so I think the momentum at the moment is a little bit soft. And I think that is bearing the imprint of Omicron and the pandemic. As we move into the spring, our sense is the consumer is solid. The labor market is solid, and corporates, broadly speaking, are in a pretty good place. So we do see some momentum in the U.S. economy going forward. Yeah. And I think what this boils down to is if the Fed's going to get an assist on this inflation, it's got to come from improvements in the pandemic. We've got to see some rebalancing away from the red-hot goods sector into services. We need to see some attenuation of these still intense pressures in supply chains. And that's where it's going to come from. I think that there's, on the spending side, there's still a fair amount of momentum.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.